Hey guys, welcome back. In today's video, we are talking about how the shorts are extremely desperate to suppress, Citadel self-exposing, the price we need to break, and many more in this video. First, we're looking at this. So as we started off the day today, we saw AMC being hit with a 78% in off-exchange volume. We saw 12.7 million volume of shares obviously being hidden into the dark pool, only really 1.3 million had an effect on the market. Now, as time progressed, going later on in the market, the off-exchange volume was still extremely high at 75%, with 22, almost close to 22.5 million volume being hidden in the off-exchange. And you can even see AMC is trading 76% off-exchange. At a certain point, why even allow buying and selling on if it's all being dark pool? So when we take a look at AMC today, you see that we were dragged all the way down to the low of 161. Now, bear in mind, AMC's had two very good days where we're up 13%, we were up 5%. And these were days where we saw dark pool of less than 70%. And as these short sellers realize that the price of AMC is increasing, as they see even the slightest price discovery happening for AMC, they start to suppress us. And you can even see Citadel talking about things like this before. Internalization without meaningful price improvement reduces competition and limits price discovery. So this is when Citadel Securities and Virtue, when they sue to have payment for order flow banned. So they were talking about the payment of order flow and how it creates serious conflict of interest and should be banned. So this was once the take of Citadel. And now you can obviously see their take on payment for order flow as they see that it makes them money. But not only that, is what they talked about with internalization. And when we talk about AMC, when we talk about dark pool, we see the internalization that's obviously happening to AMC as well. But this is what Citadel said about internalization. Internalization without meaningful price improvement reduces competition, limits price discovery, leads to market fragmentation, and should be banned. So that's what their take on internalization was. Now, bear in mind that this was before they realized they could use this to make money for themselves. And when it didn't work against them, they were very happy about it. And now that this is obviously what they're doing to AMC right now. So when we're talking about limiting price discovery and we take a look at the dark pool off exchange at 75%, you obviously realize what is going on. And bear in mind, this is what happens when you allow AMC to have even the slightest price discovery. You start then to see the suppression that is happening. Now we are down right now, bouncing between 2.89 to 3%, but this is something that we've seen with the constant suppression that is happening. Another thing on top of that, so not only are we faced with extreme suppression from dark pool, internalization, so not allowing price discovery, we're also seeing how the shorts are doubling down and increasing. You can see AMC short interest was reported at 10.91% this morning. Now 20.12% reported, not a small move. Now, we've always said this the whole time. These short interest data are, of course, self-reported. And for me, I personally don't believe it at the end of the day. I think that it is only showing the very minimum and that the real number is obviously way higher than this. But we can still use it as a reference. We can still use it as a comparison of what's actually going on. Because the very fact we see it almost double today of what the price of what the short interest was, it shows you that these short sellers are increasing on their positions. And this is what we've said with how they are worried about even the slightest price increase in AMC. Bear in mind is that these short sellers have claimed they have shorted at a very high price. They have made hundreds of millions, if not billions of dollars from shorting AMC. Yet the moment AMC bounces up even a little bit, they start to get worried. They start to feel the need to suppress. And that just shows the truth of these short sellers, of where they are at, of the fact that they are not actually making money. And the only way that they could ever make money from shorting AMC is if either every single ape decides to sell their shares, so the retail sold their shares completely to the institutions, or that AMC goes bankrupt. And we've already talked about the possibility of these two happening. You can see the price for AMC to drop this low with such high volume and high off-exchange volume made no sense. It was just a matter of time before we saw a spike in what is now the highest reported short interest post reverse split. And this is what we're talking about. This is what we're looking at. And you can already see what we've said with the price going up, because the more pressure they put on AMC, it only means that when they can't withstand, when they can't keep on being consistently using that pressure, AMC will just jump. And another thing I think is very interesting is that the high for second half of December for AMC was 211, meaning of the 92 million shares short, 42 million of those shorts are short on the 2.11. So if AMC were to break over just 2.11, those shorts would be in the red. So this also makes sense to why we're seeing the suppression happening. A lot of short sellers, or at least the short-term short sellers, started to shorting AMC below 2.11. And so, as we see the price going up close towards that area, it means that these short sellers are not only giving back their profits, but also going towards that red territory. And so, to prevent that from happening, because they've realized is that once it goes above, these short sellers go underwater, it will create a whole snowball effect of the price going up, along with the gamma squeeze that we have already talked about. That's why we're seeing the suppression. So you can see how there are so many factors right now, how there are so many data indicating to the fact that AMC should be going up. But the time when we do see the suppression happening is because these short sellers are worried. It's because of the stress, the illiquidity problem that it's happening. And then you can even see how they're trying to remove AMC from any sort of attention to prevent people from buying into AMC. Now, the reason why they're doing this, just like we've said earlier, because recently the volume that contributes to AMC can do two things. Firstly, it can beat the short sellers, the short-term short sellers, and liquidate them, causing the price to go up. Secondly, it can obviously cause a gamma squeeze of what happened. But you can see here, where AMC had 56 million in volume, but it was not on bar chart volume leaders or on Yahoo volume leaders at all. What are they so afraid of? And they're suppressing AMC post on X big time. So this is what we're looking at, and this is what we understand. Every time there is something that's to do with AMC, that is to do with positivity, or a thing, essentially something that will bring volume towards AMC, they will try and divert it, they will try and hide it. And this is what we are looking at with this as well. Bear in mind that the dark pool is also just another example of hiding away the volume. And why are they doing so if AMC wasn't a threat to them? And if you want to take a look at this, for the people who said that short sellers have left AMC, short sellers have covered their shares, when you take a look at the reported short interest for AMC, you can see how it is gradually going up. So all over these years, they've claimed to have left AMC. They claim to have covered their AMC short, yet we're looking at the reported short interest to be going up. And remember, this is, once again, self-reported. Any offshore data does not have to be reported. And these are self-reported by firms who obviously benefits from lowering the numbers because they want to bring AMC down. They want to put any bad sort of connotation on AMC whenever they can. And so we've known that the real interest should obviously be way higher than this. But you can still see, regardless of the fact that they are undermining the numbers of putting the minimum short interest number, we are still seeing it increasing. That really just shows us what's happening. Now, another big thing, and this is for people who are invested into HYMC, who are interested in silver. I know there are a lot of people right now who are very interested in this. You can see, and this is very important for AMC as well, because firstly, silver surges above a record $88 per ounce, now up another 24% in 2026. So we've already seen how the silver market is doing this year so far. Now, the reason why this has got to do with AMC is because of our investment into HYMC. Now, AMC has invested in HYMC, and I know so has a lot of apes as well. So the very fact we're seeing silver do this, it's obviously very good news for us because it means return on our investment, it means return on AMC investments. And if you want to see how the numbers are only going to get bigger, is the fact we're seeing how CME with another margin hike. And so they're trying to obviously be quiet about this, but you have to realize is that the reason why they're doing this is because they're worried about risk of one of the largest short sellers blow up because of a quick rise in prices. So essentially they've changed it from a fixed dollar amount to notional percentages. Gold will be 5% and silver will be 9%. And they're doing this because they've realized that potentially we could be seeing some big players with billions and billions of dollars of positions getting blown up, and they don't obviously want this to happen, because if it does, it will create a whole massive thing that's going to bring down, you know, so many institutions, that's going to bring down so many of these banks as well. So that's what we're looking at. But the very fact that this is happening is showcasing why silver prices will go up further. You have to realize is that this is now scaling with collaterals. So this is what's going to potentially be triggering these margin calls. This is going to be what's going to force buying and amplify the price upwards. For those of you who hadn't know, is that essentially shorting metal just got way more expensive. Over leveraged paper trades get squeezed faster. Force covering equals higher volatility. And so essentially what it means is that if we are seeing margin calls happening, if we are seeing, you know, all of these things come into effect, you're going to be looking at silver prices going to higher. You're going to be potentially looking at silver going past $100. That means HYMC will obviously go up along with it as well. And, you know, so many things is going to happen. AMC is going to have a massive return on their investment. The short sellers who have been shorting silver are coincidentally also the short sellers of AMC. So if they're getting squeezed, if they're losing hundreds of billions of dollars, you can imagine how they can't suppress AMC anymore. So this is why it's very, very important to keep an update on this. And if you even look at this, they just opened up to $50 option chain on HYMC. Just say the price of silver is going up without saying it. And so as we see HYMC go up, it just means that the return on investment for AMC is going up as well. So this is obviously very, very good to see. And for those of you who did watch my videos beforehand and also go into HYMC, you know, this is also very good news for us as well. And then just because the silver market is going crazy right now, don't forget about the Japanese yen, because we are only one big figure away from the level where the Japan government will start actively intervening on the Japanese forex and break things around in global financial system as a side effect. Because this is what we have said for a long time. I know a lot of attention is on the silver market right now, and as it should, but you have to realize the Japanese yen and what it means with all of the collateral values that have overinflated some of the tech stocks in the US. If these all come crumbling down, we're going to be seeing AMC squeezing even before the silver market takes out these big players. As always, and this is F Financial Advice, so do take out a grain of salt. Make sure to do your own due diligence and research, and I'll catch you guys next time.